Hi everyone, let's go over my bullish and bearish Elliott Wave scenarios on Bitcoin, starting on the low time frame with the bullish scenario where we're looking for a 5-wave impulsive move to the upside, where after wave 5 we are then looking for a bigger corrective structure to the downside. In this scenario, wave 4 is finished and then an expanding flat in a 3, 3 and then a 5-wave move to the downside in wave C, finishing 4 on top of the 0.5 Fibonacci taken from the low of 2 to the high of 3, which is a common target for a wave 4. Now, as we are then looking towards the upside for resistance areas of this wave 5, I can open the target boxes that I have and have a look at these different target boxes for a potential high of 5, because there's some additional resistance in these areas. Starting with the golden one, 45.2 to 46k. Then we have this blue one, 47.2, 47.5, 48.8, 49k, and eventually 50.7 to 50.9k. You can also see that just above price at the moment, we have this blue resistance area between 43.5k and 44k, which is important for both the bullish scenario here, because we want to see this past and continuation, as well as for the bearish scenario. And in the bearish scenario, you like that resistance to hold for then continuation to the downside. Now, in this scenario, the high of the impulse to the upside is the circled high over here instead of this one. And as you can see on my chart, we have a wick and then a lower high. So arguably, it's then a truncated wave 5, because you're going to be looking for a 5-wave structure where this is a 4, 5, but this wave 5 on my chart did not take the high of this wick over here. I do realize on other charts there is no wick, but nonetheless, it is not something that I like to see for a bearish scenario. But in this scenario, this has to be the high, and you're going to be looking for an impulse to the downside in a wave 1 or A, 2 or B, continuation to the downside in a wave 3 or a wave C. Now here, the common target for a wave 2 is the golden pocket to the 786 area, and for a wave B, the 886 is also still a common target area. But what is important is to keep an eye on that 886 pulled from the high to the low here, because the moment the 886 is touched, probabilities increase to take the highs. Any move coming down from the 886 has a higher probability of being a wave C or a wave Y, which means the probabilities are then higher to go back towards the upside. Another thing that you see very often is after the 886 is hit, price likes to retrace to the golden pocket area, look for potentially signs of support, and then it likes to continue back towards the upside for higher prices to come. So the 886 here, very important at 44.2k. Now, if we then look at this structure to the upside, it plays an important role in both the bullish and the bearish scenario, because in the bullish scenario, this is a wave B to the upside over here. So it's a corrective structure, a 3-wave move, increasing the probabilities that this move down is a wave C, and that increased probabilities for price to move to higher prices. Why? Because on other charts, this high here is the high. You actually have a higher high on many other charts without this wick. While in the bearish scenario, you're going to be looking for this to be a wave 5, which means this has to be an impulse to the upside. So let's have a look at this structure on the 15-minute. Now, if we go to the 15-minute, then look here to this impulsive structure that I now have to the upside, that we get a few little problems, right? We are thinking here about a higher time frame wave 5 ending. So that means we want to count either an impulse to the upside or we want to count a diagonal. Now, if we look at an impulse, we then have to look at a wave 1, 2, 3, 4, and a wave 5. But you can see wave 2 is incredibly long compared to your wave 1 and a flat X, flat once again. That's possible, WXY. It's just that time-wise, this wave 2 is incredibly long compared to your wave 1. Really lowering the probabilities of a wave 1, but you can't actually put this wave 1 on top here, because wave 1 needs to be a 5-wave structure to the upside as well. But on the lower time frames, you can't actually count over here a 5-wave move, right? You can't say 1, 2, 3, 4, 5. That doesn't work. Then it becomes a 3-wave structure. So wave 1 has to be on this pivot over here. Then you have your 2, 3, 4, and 5. But here you also have overlap between your 4 and your 1. If I put a horizontal line on the high of 1, then you can see if this is your 4 here in an ABC or a WXY, you actually have overlap between the lower 4 and the high of your wave 1. Now, the reason that I don't put wave 3 on top of the high here is because if this is a wave 3, 1, 2, 3, 4, 5, that's a nice count, right? Look how short your 2 is. wave 4 a little bit longer, high of your 5, finishing 3, 1, 2, 3, 4, 5. That looks good. But if this is your whole wave 4, it is incredibly long compared to your wave 2, which is also not really something that we like to see. Also, arguably, you have a 3-wave structure here to the upside instead of a 5-waver. So that's why, preferably, that's your wave 3 over there. And then you have your 4 and a 5 towards the upside. So there's also overlap between wave 1 and 4. And then we have to think about a potential diagonal, because in a diagonal you like to see overlap between a wave 1 and a wave 4, but in a diagonal you want wave 2 and 4 to be a zigzag structure. Wave 4 in this case is not a zigzag, and wave 2 in what I have over here is also not a zigzag, and a diagonal in general is a low probability as well, because wave 3 is longer than wave 1, wave 5 is longer than wave 3. Then we have to think about expanding diagonals as well. But even in an expanding diagonal, you want wave 2 and 4 to be zigzag structures, and also in an expanding diagonal, wave 4 preferably is a lot deeper, bigger in price than wave 2, which is also not the case. So that increases the probabilities that this move to the upside here is a corrective structure, and then a 3-wave move to the upside here instead of an impulsive structure to the upside, which gives then probabilities to the more bullish scenario. Now, if we look at the gap on the 3-hour that I mentioned the past few days, we had this gap over here, right? The high of this candle, the low of this candle, and we have this gap in the middle. The moment a candle closes inside this gap, it increases the probabilities to move to the high of the gap. We actually haven't touched it just yet, which is also, by the way, the low of the target box. So keep an eye on that level, 43,562. Now, if we look at the range, then we also passed that 12-hour order block. Another thing that I thought was very important to mention the past couple of days, because over here it was support, acted as resistance, mentioned if price can take this high, probabilities increase to move to the upside, look for the blue box. With this candle here, we wicked this high, found support on the 12-hour order block here, continued towards the upside, entered the gap, probabilities increase to move towards the high of the gap. So all of that played out very, very nicely indeed. Now, we do have some interesting support to the downside in case price does move towards the downside. I think it's at least important to mention. Daily naked point of control 39.5, also 38.8k, and the very high time frame 2021 range 38.7 point of control, which is the red line there. Now, we had bullish CVD divergences here at the lows, right? Higher low in price, lower low on the CVD. Bullish CVD divergences have played out as price took this high, and now we have to wait and give price some time to observe new bullish or bearish CVD divergences, of course. And if we then go to the probabilities of the different scenarios, and on the low time frame here, the probabilities at the moment remain higher to see higher highs. So therefore, the probabilities are higher for the bullish scenarios, where we could be looking for a potential wave 5. If we do find resistance, then in the back of my mind, I still have a potential flat scenario or a WXY, where this is then an ABC structure in a potential wave A, zigzag B, and then a C and a flat, or looking for a W, X, and then a Y before continuation, just because the probabilities are higher for this to be a 3-wave structure compared to a 5-wave structure. So we always have to observe the reaction at the resistance areas, right? If price can pass this box, I'll be looking for the golden box above, and that's how I look for price to move towards the upside. And also at the moment, which is something that doesn't really support a big bearish move to the downside, is we don't have any big bearish CVD divergences over here, like a lower high on price, higher high on the CVD, which is really something that I like to see. Contrary to that, you actually have bullish CVD divergences also with the lows here, higher low in price, lower low on the CVD, and then locally, higher low in price, lower low on the CVD. It just supports price still looking for higher highs, including then that move to the upside here, looking more corrective. I hope this video was helpful or valuable to you. Please check out the most recent educational video I've made about the best trading indicator you can use in my opinion, which is the CVD. And for now, thanks for watching and subscribing, and I'd like to see you at the next one. Bye bye.